Hello, and welcome to another update video about Rune. So yeah, the Rune chart continues to be pushing higher here. We have a bit of a setback there. At any point, really, this fourth wave pullback could start, but we might not get a deep pullback. I mean, look at how shallow the wave 2 was. And if you followed my videos over the last few, days, weeks, then you'll know that the break above $3.40 was basically considered like a breakout. And we did say if we break above that level, we should get a very, we should ideally get quite an aggressive rally, potentially directly to $8. And it seems to be going that way. I mean, since we had that breakout above that $3.40 level, which was a crucial breakout point based on Fibonacci levels, the price rallied like 56%. It is entirely possible that at any point we get a bit of a deeper pullback in wave 4. But yeah, I mean, it shows a bit of, a few red candles there, but it's not enough to really say that wave 4 has started. So I would rather focus still on upside. The difficult situation that we deal with on this chart is just that it takes a break below $2.82 to indicate that we have a more or less lasting top in place. Basically, you can say against the $2.82 level, we focus on higher because we have to give away 4 space. And technically, this wave 4 could go down all the way to $2.80. It would look strange, and I don't think it will do, but technically we have to focus on objective analysis. Technically, based on rules and guidelines, this is the space a wave 4 needs. So what that means is you basically need to be able to cope with a 42% price drop if you hold any positions to understand if this chart is getting bearish or not. Because this could also be an ABC structure to the upside. Not what I primarily watch for, okay, but the risk is always there. And again, it takes a break below 282 to confirm that this is an ABC structure and that we might get a deeper pullback, crash, basically, a move down to possibly even new lows, okay? Even though there will be other bullish scenarios along the way. But I just want to emphasize the forecast is currently just sort of playing out. That more aggressive rally has shown, and we are just tracking now the support levels to indicate when the trend will break. Now, how to trade such an aggressive move to the upside when the trend is, just gone, when the trend is running, the trend is very aggressive in a third wave. As you know, I typically say all we're doing is typically just to track the 50% retracement level. The problem is, unfortunately, we don't really have very clear swing lows here that we could use to measure the 50% fib level. Normally what we do in a third wave, we are simply tracking from the beginning of the third wave to the top. And that's currently $2.82. So that's the crucial level. Now, there will be micro support levels along the way, but the microstructure isn't very clear. We basically have a very aggressive trend, and it's really difficult to determine where exactly we are here. Therefore, this is the most reliable support. So what you can, of course, do, you could just take this length, right? But we don't have a very, very clear visibility of the subwave structure. So it makes it difficult. That's why I use $2.82, and it means the risk is quite high because it takes quite a strong drop to indicate that something bearish is going on. But in yesterday's member live stream, we discussed how it's possible to trade those aggressive trends, especially in the third wave. So if you're interested, check out the membership. You can watch the recording. We do every Sunday, we do educational topics. We also look at chart requests and so on. But I discussed in detail how such a more aggressive trend can be traded if you want to do that. Because not everybody, some people wait for pullbacks. I mean, sometimes in a third wave, deep pullbacks don't show. So you might want to have a different strategy in your, let's say, in your strategy portfolio that you might want to use. Now, I'll show you briefly how it can work, but this is not a, not a tactics video. But basically, what you could just use moving averages. Again, but it's a very time-consuming strategy. It's nothing that I really like. Nothing that I really like personally. I've used it in the past, but I'm watching hundreds of charts. So I don't have the time for this because it takes a lot of time in front of the screen. But it's a way to trade this. In a third wave, it only works basically in a third wave. Now I can't remember which moving averages I used yesterday in the live stream, but just to give you an idea, you basically have to find 2 moving averages that run parallel when the trend is strong. And basically you can buy when there is a bullish cross. And as long as the bullish cross is still, in place, you can enter at any time with a small position. Has to be a small position, and you basically buy when the trade goes a little bit against you to add to the trade. But when there is a bearish cross, then you have to get out, and that would be a stop. I mean, I'm just now using here I have to go to the 1 hour chart. I'm using here basically the 10 and the 50, but yesterday I think I used something different. So here, the last entry would have been down here, right? And basically it's about to cross possibly, and then you would get stopped out, would have contributed to a 50% profit. Nice. Just with that strategy, okay? And you use Elliott Wave in addition for the bigger context to understand basically, is it a third wave? Because it really only works in a third wave. Now, when you realize also with the help of Elliott Wave that you get into a sideways correction, you don't want to trade it, but you want to get back in when you see that the trend is running again, maybe a breakout above the last highs, and then you just focus on, okay, have they crossed or not? But that takes a bit more work. It's not as simple as just taking 2 moving averages. You have to do the work to identify the right moving averages. But yeah, I mean, there is no perfect moving average for this. You have to find just 2 that fit well. But yeah, I mean, this would have worked out. I mean, look at down here. Moved. Never crossed. Here it crossed. You would have got out. Maybe then get back in. But you see, it's time consuming because you have to observe the chart all the time. And you could do that on the 15-minute chart. You can do that on the 30-minute chart. But that's one way. So you have to decide your own time frame. But that's one way of trading a trend that's already gone. But you just have to get out when there is a bearish cross, basically. And this method is not going to work any longer once we see a break below the 50% retracement, because that's the signal that the third wave is over, okay? And that something more bearish is going on. Basically, that 50% retracement filter keeps you out of the low probability structures, because any break below the 50% fib level means we're either in a diagonal or in a deep B wave or something messy. You don't want to do that. You only want to apply this in an impulse. So yeah, but overall, the next extension levels to the upside are, let's go here, $6.38 and $8.21. Let's see if we get there. For now, I have no indication that a substantial top is in place. That's my update about Rune. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure you follow us on Instagram and Twitter. You can find the links in the description. You can find additional content there every single day. Sometimes updates, signals, stuff about mindset, and much more. Thanks a lot for watching. Bye-bye.